Let's talk about something that might feel a little uncomfortable, but is absolutely crucial if you're even thinking about starting or growing a business. The very real possibility that things might not go as planned. You've seen the headlines, the overnight success stories plastered all over the internet. They're inspiring, no doubt, but they often overshadow a less glamorous truth. Think about it. You pour your heart, your savings, maybe even your sanity into an idea, and statistically, the odds can feel stacked against you. This isn't just about hitting a few bumps along the road. Data from places like the U.S. Bureau of Labor Statistics paints a sobering picture. Within just the first year, about 20% of small businesses don't survive. Fast forward to the 5-year mark, and nearly half are gone. 10 years in, 2 out of 3 have shut their doors. These aren't just cold numbers. They represent dreams deferred, livelihoods impacted, and tough lessons learned. And that's why today isn't about dwelling on failure. It's about flipping the script. Instead of only recognizing the risks, we're going to dive into the data, real historical performance, to highlight business models that have consistently shown resilience and higher odds of long-term success. Is this a magic formula? Of course not. Nothing in business is guaranteed, but it's about being strategic, making informed decisions, and stacking the odds in your favor from the outset. Because let's be real, that first venture, it carries weight. If it falters early, that sting of disappointment, what's called recency bias, can make you hesitant to take future risks. But a small win early on, that can be a huge confidence booster, creating momentum and clarity for what's next. So let's dig in. Based on the data, here are 6 business types that have historically demonstrated a higher level of resilience and long-term success. First up, laundromats. Now, I know what you're thinking. Laundromats? Where's the excitement, the cutting-edge innovation? But stick with me. According to industry statistics, these businesses have shown success rates in the low to mid 90% range over a 5-year span. That's impressively strong. Why? Because clean clothes are a universal need. Recession or boom, people need laundry. The model is simple. Coin or card-operated machines delivering a fundamental service. Startup costs are often reasonable, and if structured well, laundromats can generate largely passive income with minimal staffing. We've covered this in depth before, from startup basics to scaling strategy. It may not be flashy, but the numbers tell the story. Next, rental properties. There's a reason real estate is considered a cornerstone of long-term wealth, and the data supports that, with rental property businesses showing success rates in the mid 80% range. The strength lies in the consistency. You're dealing with real, tangible assets in a market that tends to self-correct over time. Rental income provides steady cash flow. There's often a clear financial equation, mortgage versus rent, and that predictability is a huge asset. Add to that the potential for property appreciation, leveraging mortgages and tax benefits like depreciation or deferred capital gains, and it becomes clear why this sector has such staying power. Of course, like anything, location and due diligence matter. Third, self-storage facilities. This one might not be on everyone's radar, but it's quietly been one of the strongest performers in the real estate sector over the past decade, with success rates often hovering in the low 90s. Why? Because as people move, downsize, or accumulate more belongings, they need space. And compared to managing residential tenants, self-storage is typically much less demanding day to day. What's more, technology is making it easier than ever to run these operations efficiently. Think automated gates, remote monitoring, and online payments. Competition is increasing, yes, but for those who adapt and add value, it's a compelling business model. Fourth, transportation services, especially last-mile delivery. With e-commerce growth showing no signs of slowing down, the demand for reliable logistics is only increasing. Whether we're talking about courier services or freight and logistics, success rates tend to land around the mid 70% range. While fuel prices and driver shortages can present challenges, the core value remains strong, moving goods quickly and efficiently. Many entrepreneurs start with a single vehicle, and the barrier to entry can be relatively low, and the potential to scale up is significant. Fifth, buying existing online businesses. This one comes from a personal win, selling a website I acquired for almost nothing. It's a small but powerful reminder of the digital opportunities out there. Buying an online business that already has traction, revenue, and customers can significantly reduce your startup risk. Platforms like Flippa, who are partnering with us today, make it easier than ever to browse and buy digital businesses with established models. You might even find deals with seller financing. Rather than starting from scratch, you're stepping into something with a proven track record, and that's a smart way to play the online game. And finally, vending machine routes. This business might seem small scale, and that's exactly why it appeals to so many. With a relatively low initial investment, you can buy a vending machine, find a high-traffic location, and start generating income. The success rates in this space are typically in the high 80s to low 90s. Why? Low overhead, minimal labor, and products that people buy on impulse. It's also a fantastic entry point for learning the mechanics of a business: inventory, logistics, pricing, and consumer behavior. Many entrepreneurs start with a single machine and build a route over time. It's simple, scalable, and an excellent foundation. So there you have it, 6 business types that, according to the data, are more likely to weather the storm. Remember, no business is bulletproof. Success requires effort, adaptability, and smart planning. But by paying attention to trends, history, and proven models, you give yourself a better shot at thriving. Now, I want to hear from you. Which of these businesses stands out to you the most? Have you tried one? Planning to? Let's chat in the comments. And if you found this video helpful, please hit that like button and subscribe for more no-fluff insights on building financial freedom through smart business. We've got a lot more coming your way.